Alright, crypto crew, yesterday was the day the Pi Network community had circled on their calendars like it was the Super Bowl of crypto. It's your boy, Goldrush, back on the Goldrush Crypto Daily channel, and things have been getting spicy in the Pi-verse. We're diving into the aftermath of the big migration deadline. Did the market hold its breath, or did we see the Pi price take a nosedive? This is the kind of drama you can't afford to miss, so grab your popcorn and let's get into it. We're gonna break down what the experts were predicting, what might have actually happened now that the clock has struck the cutoff, and what this all means for your Pi holdings. Stick around till the end, because we're gonna be dropping some truth bombs and getting your take on the whole situation. Trust me, you don't want to miss this. But before we get knee-deep in Pi drama, make sure you smash that like button if you're a Pi pioneer or just curious about this whole shebang. Hit that subscribe button so you never miss out on our crypto deep dives, and ring that notification bell so you're always the first to know what's poppin' in the crypto world. Alright, let's get this Pi postmortem started. Alright, Pi fam, yesterday, March 14th, 2025, was the big day. The final migration deadline for Pi Network. And let me tell you, leading up to it, the crypto air was thick with anticipation and maybe a little bit of panic. Traders were getting seriously antsy, and according to the article we're looking at, market sentiment had shifted dramatically, with a lot of folks fearing a sharp price crash that could send PI into a freefall. Talk about some high-stakes crypto. Over the past few weeks, PI had been trading in a pretty tight range around $1.67, kind of teetering just above a key support level of about $1.64. Despite some attempts to break out of a descending channel, the price was looking pretty vulnerable. Analysts were even warning that if it broke below that support, we could see a cascade of sell orders, potentially driving the price down to around $1.43 or even lower. That's the kind of talk that can keep you up at night, right? Now, the main reason for all this jitters was that stringent migration deadline. To make the jump from the testnet to the fully operational mainnet, every single user had to complete a mandatory Know Your Customer (KYC) verification by 8 a.m. UTC yesterday. Miss that deadline, and you risked forfeiting most of your Pi holdings except for the coins you mined in the last 6 months. That's some serious pressure, and it makes sense why so many traders might have been tempted to bail out preemptively, adding even more downward pressure on the price. It's like a crypto game of chicken, and nobody wants to be the last one holding the bag. Looking at the technical indicators, things weren't exactly looking sunshine and rainbows. The market was showing a deeply negative funding rate in the futures market, which basically means there were a whole lot more people betting on the price going down than going up. Plus, the moving average convergence divergence, MACD, was nearing a bearish crossover, which is often seen as a signal that further declines could be on the horizon. And to top it all off, the price action was forming a head and shoulders pattern, a well-known bearish technical formation that really heightened the concerns about whether the recent rally could even hold. The lead-up to the migration deadline wasn't exactly smooth sailing either. There were reports of technical glitches and confusion in the KYC process. Apparently, a lot of users were running into difficulties due to system delays, which only made those fears of a mass sell-off even worse as investors scrambled to secure their precious Pi. And let's not forget the anticipated token unlocks that are likely happening around this time, adding another layer of uncertainty to the mix. With millions of tokens potentially flooding the market, the dilution effect could further erode PI's value. It's like a perfect storm of potential price-dropping factors. Even the crypto social media sphere was buzzing with warnings from prominent analysts and veteran traders. The general consensus seemed to be that while we might see some short-term pumps due to the hype around Pi Day and the migration event itself, the underlying issues were pretty significant. Now, there were some cautiously optimistic investors out there, hoping that a smooth migration would restore confidence and pave the way for a rebound. But let's be real, such a recovery would heavily depend on the market being able to absorb any potential shocks without triggering a broader, more severe sell-off. So, where do we stand now that the dust has mostly settled on the migration deadline? Well, as of today, March 15th, 2025, we need to take a look at what actually transpired. Did we see the massive price crash that so many were fearing? Did Pi manage to hold on to that key support level? At this point, you could insert some speculative commentary based on the actual price action if you have real-time data, or make an educated guess based on the pressures discussed. One thing's for sure, the success of this migration is absolutely crucial for the long-term viability of Pi Network. If a significant number of pioneers successfully completed their KYC and migrated their holdings to the Mainnet, that's a huge step forward. However, the lingering concerns about those token unlocks and the overall market sentiment still remain. Alright, crypto fam, if you're finding this post-deadline analysis insightful, don't forget to smash that like button and subscribe to the Gold Rush Crypto Daily channel. Your support helps us bring you the real talk on all things crypto. So, what are your thoughts on the Pi Network migration deadline? Did you manage to get your KYC done in time? What do you think the future holds for Pi's price? Let me know down in the comments below. I'm always eager to hear your perspectives. Thanks for tuning in to the Gold Rush Crypto Daily channel today. Don't forget to check out our other videos for more crypto news and analysis. Until next time, this is Gold Rush signing off. Stay safe, stay informed, and keep your eyes on those charts. Disclaimer. Please remember that this is not financial advice. Cryptocurrency investments are highly volatile, and you could lose money. Always do your own research before making any investment decisions.